Right. Let's get the right. Can you see my mouse okay?
Yep.
Yeah, we can.
Right, better put a video on as well. Right, can you see my mouse okay? Oh shit, it's all sorry, excuse
Yeah.
my French.
Yeah, we can.
Every time we open it, it opens a second window. Oh, there we go. Okay. Just keep your keyboard in the way. Right. Let's get going. This remote's not there. Right, I tried doing an early doors trade on the FTSE for the closing gap actually, and it looked like it was going to come down quite nicely, but obviously hasn't happened yet. DAX ATR today is 37. It's looking pretty down the DAX after Porsche and Volkswagen, big manufacturers have slid after cutting annual forecasts down to about 2% margins, hardly anything. So it might be worth having a look at the DAX once we're open to see what happens with that. Got all-time record highs on gold, and the Dow S&P absolutely monsters. Quite interestingly, I was looking at some of Trump as being absolutely conning it in. So far this year, he's had $88 billion of revenue so far on the on income side from all these tariff wielding. Today, right, we want to close the gap today on the FTSE, of course, if we can, and gold. Well, did an early doors trade on gold, 6 pip stop, 9 pip entry, 1.5% if it's 1% risk, or as you know, I always trade 2%. So that was a 3% bank early doors this morning. And if you'd run the bots, where's gold? If you'd run the bots, then you'd have got at least 2%. Oh, they're on again. Right, okay, so the bots have triggered on again. This is version 2.3. Oh, I seem to have got a ghost of a bot here. Don't know why that's that. Another quirk of version 12, maybe. Today we have a tentative target on gold. Let's turn the trades off just for one moment because the bots are doing those trades. We're kind of looking at where the market might run and where the next fib or target might be on a larger basis. So if we kind of have a quick look here. I think I did this one. Kind of try to recap what we did here. No, that was the target from overnight. I'll have to think about what we did there. But it might have been on a lower fibbo. But on the 4 hour, you can see we really are due a bit of a pullback, I think. We monstered it yesterday on gold, so daily edge. Let's just have a quick look. I put some other things in the daily edge. You got USD CAD seemed okay. USD Swiss, USD Japani all technically looks like it's going to come off, but you know what? We just don't need them. Between the indices, gold and a little bit of crude, don't need any forex to make an absolute killing in the market at the moment. So I'm not going to labour the forex market when our aim is just to make money. So yeah, yesterday over 3% and over 3% on the bots as well. So absolute monster this morning. But depending on what risk profile you had, we've made 2.5 to 5% this morning already on gold. So that's absolutely great. I put the signal that put the signals in early this morning on gold? Oh, I thought I did. Ah, there we are. That was 6 o'clock. 6 o'clock this morning. These were the orders in this morning, and the markets just popped up here on a 15-minute. The bot took some money. Our trade took some money. That was very nice indeed, which was a 15-minute fracker, and ideal bit of trading. If we go back into 15 minutes, you can see early doors this morning we took that fractal there, boom, hit the target, no problem at all. I'm really kind of at a loss. We've been completely overcooked since what, 18th on gold, and it just keeps going up and up and up. So we'll just keep taking it until it goes up. I saw a note in the gold room this morning. I think it was in the gold room. Who was it? Simon. Is Simon in? No,
Yeah.
Oh God, you made me jump there, mate. I would turn my speakers down and they jumped out my skin. When I say put the gold bots on, when I say bots on, I'm putting all the bots on. If I'm only doing the 5-minute frackers, then I'll just say the 5 minutes. So all I'm doing is trying to guide you on what I'm doing. Everyone's going to manage the bots on their own. There's a 15-minute fire and forgets, of course. So as you saw last night, I was just creaming the money out of that, coming to targets, taking the money, moving stops to entry. And we can talk about how to switch the bots on and off to turn them from a bot to a manual trade, if people haven't worked that one out yet. But yeah, so let's get into it. So what we're looking for here on gold, do you know what? You can see there's another 15-minute frack having a go here, and we'll have to have a look at that. But let's get back to this FTSE. So want to close that gap, then we can go over the rest of the stuff. So we're in on the early bird trade, but if you haven't traded this yet, then I would look for a breakdown under here. Now, if we get stopped out on here, we will look for a breakdown on here, and we'll be looking at 13 pip stop, 13 pip target if we get stopped. Now, this normally, the early bird trade is there to come in and either close before 8 o'clock or directly on 8 o'clock in profit. At the moment, you can see where we are. We've got on-bounce volume going up, so we might get stopped out of this. So we've got stopped out of that early bird. So that 5% profit's now 4%. But what we're going to do here is we're going to put this drop at 90.40 into here. So this early morning spike, if we weren't in here, then we would have sold straight away Camera breakout long. Do we want to sell Camera breakout long now? I'd like to see it above Camera breakout long and then drop down. The market is again quite extended. You can see here the market's been extended for quite some time, and it's refusing to really break out of the 72.40, 72.50 area. But it's going to be it's got a bit of a struggle with the pound being strong, so that's a bit of a shame. So if you just traded the 1% this morning, we're down to 1.5% profit, or down to 4% profit, depending on what you took. This gap does need to come down. I'd like this gap to come crashing down. That would be a nice trade. You can see here where I've got the targets at 92.64. Those are Fibonacci targets. should the market break out of, excuse me, should the market break out of camera, break out long, then from here up to this area here, this soft tissue, as I call it, is round. You can see here into the 1 hour area. The market has found resistance before breaking through, and then support before breaking back through. So you expect the market to do the same on the way up. But we're in the market now, and we're going short. And we want this gap to be closed. Kind of leaving the screen at this resolution just for the moment. It'd be great to come down to the close. Even better to actually get something around the daily pivot. But I think I put it onto the daily edge. Where have I got it? Daily edge. Where's my daily edge? There we are. Keep referring to this because I've been writing about all sorts. So there we go. Today we want the closest gap here, first of all. Then we're looking for a one-to-one risk-reward ratio. This assumes that we're going to get buys off the close, but not dip below the daily pivot. So I think that video that stuck out yesterday on how to do all the markets, how to what do you call it? What did we call it? What's help me out? Is Terry in the room? No, he's not in the room. Landscaping, that was it. How to analyze the market from a daily all the way down to 5 minutes, find out where all the levels are, work out what your strategies are going to do your fibbles, do your pivot points, etc. And that's posted on YouTube now. I don't know what we call that one. What did I call that one? Let's have a quick look. If you want to have a look at it, if you're watching this from YouTube and you haven't seen it, then you really do need to go and have a look at it. It's called, let's have a look. Can I put this up? I'm just looking at a different screen at the moment, trying to find. There we are. Put this across here. Videos. There it is. There. Real Trader Setups explained about planning your day, etc. Great video. It's a training session we did in our internal room, and shows you all about how to set your screen up every single day, your trading strategy, how to analyze the markets. Right, back to the edge. So we'll do a fibbo off this. We'll use some of the stuff we did in the training room. Boom, 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 boom. So when you're doing the analysis for a market that is yet to open, so the FTSE does not open till 8 o'clock in the morning, cash market, you need to get a view of where the market might go. So we can go to the bottom half of the market here and think, well, if we're going to go and close this gap down here, then you can see where your fibbo targets are going to be if the market bounces off the close. It's going to be about 96.64 on a 61 Fibonacci. And if it comes into this area here, the holding the close, then you're kind of looking at 92.82, which incidentally is correlated quite nicely to an R3 resistance trade. So hitting the wall, and you can see this area is an area that will be difficult to get through, should we get through this one first. But first of all, I want to concentrate on getting this market down. We've got a red Renko block tick. We've got a 926 cross under tick. On balance volume is going down as well. And do you know what? It's kind of struggling this morning. Look at that big spike in that 15-minute there. Well, yeah, so that's a 14.5 pip spike, and the ATR today is 8. So that's a big spike, trying to get tight stops in the market out. Me being one of them. But we do, when the opportunity is there for an early bird close, then you've got to take that opportunity. Taking that early bird trade with that 926 cross works about 8 times out of 10. So don't get too upset when it doesn't actually work first crack. We just play the statistics. The thing is, you need a strategy. You need to rigorously implement it and need patience to actually execute and watch it. Now, if you don't, if you can do that and you've got a strategy works more often than not, on this one, 8 times out of 10, are you really bothered that it gets stopped out? Probably yes, because no one likes to get stopped out, especially when we've had such I say a big win streak. We over the past few trading days, we've been absolutely smashing gold and the FTSE and the S&P and crude. So you do get a bit. It surprises you when you actually lose a trade. You think, oh, I shouldn't have done that. But the trade's a trade. The direction is the direction, and the direction should be closing the closing gap. Now, I got a note here. What I hadn't realised. I was talking to the guy, you guys in the room. Where's my notes? Oh, right, yeah. Is that I hadn't realised that many people outside the room do not understand the cash market and index. They think the indexes work like a commodity or like a forex. They just don't. Completely different. There is a cash market whereby real money is exchanged. Real trades are exchanged between 8 o'clock and 4:30 of the FTSE, for instance. And after that, the markets are made. So there's not actual cash transactions. So my group thought it would be a good idea if I did an explainer video on YouTube on what a cash market is. But also, many people outside of my room do not use pivots. All these pivots, Cameron breakout long, R2s, R3s, daily highs, daily lows, closing gaps, pivots. And if you are trading an index and you don't understand these or not using them, you're absolutely flying blind. So I've coded these. Someone said, ask Brian. I've got these for pro real time. Now, Brian, you use TVD. Have you coded the daily pivots for TV?
Yeah, I've got those if anybody wants them.
Oh, right. Okay, great. But I was going to say I'll code them in TV, so and put on the website so people can use them. But if you've got them already, Brian, that's fine. Just throw them on and people can use them for TV.
Sure.
Absolutely. Pardon? Did someone say something in the room then? No, it's just me talking to myself. So we're doing cash markets, and going back, I hadn't realised there are lots and lots of things on YouTube, comments I've not even looked at. Apparently, YouTube have held them, saying they're potentially inappropriate. Don't know why, but I pressed the hell button and a whole load of comments come in that have been held for nearly 3 months. So if you are one of those people that just got a reply last night, then I'm really sorry it was late. I didn't even know we had all those. So I'm going to do a pivot, cash markets, a 9 EMA, and another 15-minute bar. We're getting this market going against us, aren't we? Let's take a little zoom out. We are completely overcooked, yet the market still wants to break out. So
alert triggered.
We're being stopped yet again. So that's trading for you. That's a bit odd, but that's the way life goes. You've just got to take the rough with the smooth. Now that's curious. Do I want to trade this, push this and go along now? We need a 5-minute bar, about 5 minutes of action to tell us what the market's going to do. Now, if we're above Cameron breakout long, and we need to have a closing bar above the Camarilla breakout long. I do have two targets on here, but these targets are predicated on the market dipping down in between the close and the daily pivot. This one is just into some soft tissue anyway. Do I want to trade that? One thing I never do is chase a market. So never ever chase a market. We're on CBOL, which stands for Camarilla Breakout Long, a breakaway trade. For people in the room, a 5-minute fracker would probably be okay to do this. I'm not sure. Oh, I've deleted my fractals. Hang on a second. There we are. There they are. So there's the frackers. There is a really nice 5-minute fractal above CBOL there. The issue we've got, of course, is we've got a hole in the market, an area of the market that has not been traded. And generally, it's one of the market makers' functions to have balance in the market to make sure there's equal buys and sells. And at the moment, there is a gap here from there to there, which has not been traded in cash market. Therefore, it's a hole. So the market maker will be trying at some point to close that gap. Generally, it's closed very early in the morning, usually within 4 hours. But we can have gaps in the market that can stay for a few days. Generally, only about 20% of the time that happens, but it does happen. Do I want to chase this? I don't think I do. I don't think I do. So let's just go and have a look at what's happening everywhere else. So we'll have a quick look at what's happened yesterday. We hit all the targets. We put these targets on the edge yesterday. So I keep pulling this edge up. This is an AI generate. Well, the information is AI sourced, and then I do an overlay on it. There's a few people on YouTube watching this. Just very quickly explain. You can see it's on the website. It's a report I issue every single morning. For people outside of my room, it's just £10 a month, £2.50 a week, and you get it delivered every single morning. And it tells you exactly, very quickly, whether we're risk on, risk off on the market, what all the key pivots in the indices are, which are absolutely key, and you need those. What's happened overnight in the past 24 hours, and all the hyperlinks there to read anything further, events to watch out for today, and then the calendar. You can see here we've got 8:30, we've got PMI. Really don't want to be touching the DAX today. That's going to go all over. I think it's negative, and with the Porsche and VW slide cut in on its annual forecast, I think we'll probably only see the DAX come off after 8:30. We can have a look after 8:30, see what's happened. Then we've got PMI for UK. We do not want to be in the market at 9:30. Or we want to be risk-free in the UK. And then this afternoon we've got the American S&P PMI Q2-3. Now, that's not going to stop us trying to close the gap on the Dow and the S&P, so long as we're out of the market before the PMI figures come, or we're risk-free. Some more research and further reading links if you're interested in that. And then the bit that everyone's interested in is what's going to happen with high probability buy it and sell recommendations. Yesterday, we were going for the gap. That was hit very nicely indeed. And then we hit both our targets as well, and we created a new all-time high. So absolutely monstered the S&P yesterday, as well as gold. Gold made around about 6% plus yesterday on gold. USD CAD, I've given up on the USD CAD, USD Swiss, USD Japani. They're just drifting around. So I'm going to leave the FX alone, don't need them. But crude absolutely smashed all the targets yesterday. And again, today we're going to sell strength into crude to come down. So if you want to get this, you can get it on a monthly subscription. Try it for a month. Don't like it, throw it away. It's into the third month now, and it's lost 1 day in 3 months. So I'll leave that thought with you. We use it every single day in the room to make money. If you want to get it, just go to the website, and it's on the website. Try it for a month, see what you think. Well, see what you think. Well, it doesn't matter. It just works. So this is what happened yesterday. We hit the closing gap from beneath, hit both targets, and now we're right on the close. You can see here, right on the close. What we'd like to see here is a dip down towards the daily pivot, get the daily pivot boys in, and go for a trade off the daily pivot. Ideally, we'll buy around about CBOS area. That would be perfect if we can get nearly a 61% retrace level, but I doubt that's going to happen. But if you can see the market here, the market as from the 7th of September right through the 16th had a wee bit of a dip, and now from the 18th and that past 6 days, the market has just been hitting all-time high after all-time high. So be very cautious about this. We could get a severe reaction today on the PMI on the afternoon. It could really do with a healthy pullback. Today, cautious with a C-ball target, camera breakout long target, I think. Excuse me. Let's go and have a look at crude. You can see these, just to the, you can just see here these low pins and rejections, high pins and rejections. The market really is just hovering around camera breakout long. And what I'm going to do is, depending on the candle, depending on the candle structure, the market comes down. This is a gap to be closed. Now, I've tried twice and failed twice. I'm not going to chase the market up because I haven't got the headroom of a one-to-one risk reward. If I can't get a one-to-one risk reward, then I'm not going to risk 1% to get back. Just turn the bells up, ding dong bells off for the room. People, you probably can't hear it, but every time someone comes in and out, the bell rings. Right, crude. Let's go and have a look at the other things that are on the other commodity apart, and then we'll look at gold. Crude. So yesterday we had the rise. I'll just take that off. We had a trade yesterday straight through to 62.32, absolutely smashed it, then down to 61.62. I'll just take that off. So today, what we want to be doing is selling the strength again. So what I'm going to do is put in an oblique resistance line there, looking at peak to peaks of what's actually been happening at the micro levels, the 15-minute levels, because those are the levels that we trade at. A 15-minute bar reversal. You can see we've got loads of chop here. The market dropped off. We've got lots of chop here. So we've got an alert on this area here. And what I'm going to do, I'm going to put an alert under 15-minute bar here. So whatever happens to the market will either be alerted for the market to continue up and be overcooked on the Stotch. Stotch settings 15.55 for day trading on the crude. And if the market rolls over, then we'll see if we can get a 1-to-1 to 61.62. If I move out a little bit, you can see where targets have been before, things that we have traded before, and ideally we'll go and smash 61.62 again, and maybe down to this 4-hour support area. We'll just have to wait and see. You can see quite clearly, even on the 4-hour, the phase. I mean, where's my pen? The 4-hour phase waves. No, there is. So we've got phase and wave 1, wave 2, another 1, 2, another 1. Very weak pullback. And is this one going to continue all the way through? All the way down there? I probably will do. Probably will do. The issue is, as a day trader, where do we put our stops? Because we want to have a day trading stop, not a big swing stop. We don't want to spend 2 or 3 days or a week making 1%. We want to be making 1% in that day. So let's jump right into the 1 hour. We can see here in the 1 hour. Let's just have a quick look at that pullback. The overnight pullback. Just a front run, the 61% Fibon. A retrace. Let's just have a look at where the potential extension may run. That takes us down to 61.58. Let's get into the 15 minutes, and we just need to see what's going to happen here. We're going to get a reject. A nice firm trade would be nice. It would be great if we could put in a rejection into this descending resistance line, and then take a 15-minute bar and target 61.62 and below. That would be nice. Have to wait and see. So a quick look at gold while that's developing. I've still got that core. Has anyone else in the room got a ghost bot on it? Not a ghost bot, but you can see here that it shows it's on twice, but it clearly isn't on twice. Oh, it clearly is on twice. Right. Yeah, so there's 2 bots switched on. It's just wrote it down at the bottom. So this one must be 2.3. And let's have can I pull this one off? Let's put it at the bottom of the screen. What version is this? 2.2. So the fractals of the version 2.2 and 2.3, both the 5-minute robots are on. So yeah, I thought it looked a bit weird. I'm just checking that both bots are on. So both bots are on. So both of those are trading again. They cashed out again this morning, and they're back on. Has everyone got the gold bots on? No one? Have you got yours on?
Yeah, I was late switching my 5-minute one on, so 2.3. But
right. Okay.
It'll catch something.
Yeah, mine's on, Steve.
Pardon?
Mine's on.
Great stuff. It's difficult when the markets are creating all-time record highs again. You got multiple bots all biting, taking money out of the market. Every time you see a new all-time high, it's really, really difficult not to keep taking the profits. And the bots are doing stop to entries and doing particularly well. Yeah, I've got some ideas for the Friday bot session on gold. I know Terry wanted to have a look at. We've got a derivative of the 5-minute. You wanted to look at a stacker bot that would once the market hits its stop to entry function, the market will then actively search for another bot and another entry, therefore keeping the risk profile at 1% and the leverage at 2, then 3, then 4, then 5, and keep managing it up until we have a five bot stack with 5% leverage and 1% risk. That's kind of utopia. Whether that could actually happen or not, I don't know. So I'm going to do a little bit of work today, maybe tomorrow, to see if we can get one of those bots to work like that. But I think we're up now. Is it 88% or something like that? Where's the gainer? I'll just have a quick run that back test again. We'll just put some units in, and we'll run just one of the 15s trading systems bots. 103 gold. So rather maximum wins, maximum max gains. See how that's actually performing. What I have to do is, for some reason, and I don't know why, V12 automatically defaults to that window. And if you know how to get rid of that default, please do let me know. There's nothing I can't make the flipping thing go back, which is another bug on V12, I think. So if we do it to real time now, and we'll take this. Have I got enough data? Have I loaded enough data for the beginning of the yeah. Just run. I'm gonna make sure it's set correctly. Yeah. That was fast. Yeah, so you can see we're plateauing a little bit here with a little bit of a drawdown, but we haven't had a losing month. 88% up, and it's quite a good hit rate. 83% hit rate. So yeah, and the max win is running at about 86% win rate and 86% return so far. So we're heading for nearly 200% on all these bots together. So that's not so bad. I'm just going to put that window back down this left-hand corner here. So, basically, if you're not using a bot, so I keep saying this in the room, you need a flipping head red, because all you need to do is you don't even need to use the 5-minute ones. These are the 5-minute frackers. You just need to be able to put the 15 on fire and forget. Now let's get this into 15, because I know we've already won, but there's no point in winning more. There's no reason why we can't win more. So we've got the 5-minute frac, the 15-minute fracker breakout this morning won very nicely, and then there's another 15-minute frac here, but we can turn that frac off. Now we're moving with the Northern European market open. We can have a little look at trading a 15-minute bar. Did anyone trade the 15-minute bar that I put in early doors this morning? 50-minute fracker, I mean, on gold. Nobody? I wonder where Terry is, because he was up and around this morning when I put there and he was trading. Yeah, I'm mad. Silence from the floor. I won't rub your nose in. We made 5% on that then. So 15-minute bar here. So kind of let's review, even though we know we don't really need to. We know where the 1 hour 200 EMA is. It's so far down there like a snake's belly. It's crazy. The market is massively bullish. 1 hour 200 EMA massively bullish down to 15 minutes. So the price action is very bullish as well. Price action has determined whether or we determine the price action of being bullish or bearish. Is it trading above or below the 9 EMA on any time frame? And it's clearly above. So into the 15-minute, we've got even the 15-minute with us from a bull perspective. We have not closed since, well, early doors this morning. We had a close on the 9 EMA, but yesterday we had a wee pullback. Well, it's early doors this morning. So we took all our profit into the highs last night. And then the market, the fracas come on again this morning. What time did gold close out? So 6:32 this morning and 6:45 for full whack. And then the last one I was closed at 23:05 for full whack. And then right, I didn't realize the 5-minute was in and out last night at 7 minutes past 2 and hit full target as well. And then at 3:04 stopped at entry. Wow. All right, so we've had two full whacks on the gold bots this morning. I didn't realize that. I just left them on. Right, so getting back to this, we've got a nice 15-minute bar, 11 minutes left in the edge of that particular bar. This will look at an all-time record high again if it's successful, because we're going to take a note that this is a grade 1 bar, which is the best bar you can get. That's on the 15-minute guide. If you look in the links below this or most any video, the 15-minute bar guide is completely free. If you're watching it and don't have the 15-minute bar guide, just download it from the website. It's free, and it will show you how to trade a 15-minute cycle using Iconashes. Right, so at the moment we're still waiting for this to develop, and that range is 8.3 pips at the moment. Target I've got up here is 15, so that is very doable. It required an all-time high. Let's just have a look at a little bit of structure here, so we can just have a little bit of look. Well, we'll start here because right now the reason I was going to put my mouse here and spotted this is when you're doing a fractal, when you're doing not a fractal, when you're doing a Fibonacci extension, you're extending the potential price from ideally higher highs and higher lows. And when you see a structure, a low breaking the previous low, then it's not really a good extension, because the extension is from a base level to a peak back to a base level. And if that base level is below your particular floor, then forgive the pun, but your expansion, in my view, will be flawed. So you're looking here at, and this is not particularly good because we've got indecision candles, but we can look here, and just for our own peace of mind, we can have a look at where the market's hit. So 100% Fibo extension into here. We're in the extended view, 161 of 3761. That's using 15-minute expansion tool. I'm just going to use that again. I just want to see where Fibonacci is. The gold as well as other commodities are full of Fibonacci traders. So we want to be able to see where people will be potentially whacking profits out using fibs from 15 minutes and above. So there we go. That's what we're going to do. We're going to, so we know that that's a potential Fibo. We can run out to a 1 hour and have a look at where the next one might be. The issue we've got here is ignore this gap. This is a server close for gold, shuts down momentarily overnight before restarting again. Where can we go here for a Fibonacci? Well, to be honest, use it. It's not particularly clear on gold. We could just run a line straight up to this high, but I'm quite happy to ignore one candle. Don't generally ignore two, but we'll just run one up here. Just have a quick look to see if we've got any correlations for Fibos. Well, absolute correlation 78.6. So that could be quite an important level for the Fibo boys. So I've obviously set my target using our assertion that this is overnight action and will not impede the Northern European Open. So at 78.6 Fibo is 37.73.4. So I'll put the target in at 30. So not 33, 37.73. Right. It's always good to kind of understand where the market might go, and then you can have your target window then really based on Fibonacci principles alone. We've got nothing to put an anchor in or review back left because the market has been creating all-time record highs. So every time we're trading now going up, unless it's a deep retrace, we're going for an all-time record high. So that's our kind of box of interest, really. And there's no reason why we should not trade that. 6 minutes to go. It's a pretty squat candle. If we look here, we've got, let's get the, let's see 1 hour impulsive move. It's round about nine pips at the moment on the ATR. And we are running net positive on the OBV. So that's a personalized indicator on balance volume. This tells me on balance, where is the volume actually running? If it's positive, then it's above the 9 EMA here. If it's negative, then it goes below. This is something you can get this off the website as well. This is for TradingView and for Pro Real Time. Gives you a heads up of what's going on. As far as ATRs are concerned, for a day trader, we just use 5-day ATR because we're wanting to intraday trade. We don't need 10-day smoothing, 14-day smoothing. A week of smoothing is enough. So on the daily, it's a 5-day ATR and then 5 units if we are trading within a particular time segment. So what we've got here on this average true range, this gives us an average true range. In other words, in 1 hour, the impulsive moves round about 9.4. We are trading on 15 minutes. And we can see here that if this market does break out, we've got a trade that might only last 1 hour, which would be very nice indeed. It's 8 pips as a break up from there, and we've got 8 pips again to the bond side. So long as this bar stays like it is, in this size, we've got quite a nice 15-minute bar that could give us an impulsive move into this box within 1 hour. And the okay, so we've had two trades on the bots that were quite nice. I have mine set for 2%, so that's 4% on gold this morning, plus the trade we did early doors, which was a 3% trade. So it's 7% on gold this morning. It's absolutely, it's just the asset that keeps giving at the moment. Just bear with me, I'm just going to look on this other screens on. Yeah. FTSE's just dithering around again at 92.49. It's doing absolutely nothing. Pretty rubbish. So you can see here we're developing a little pimple at the bottom, which turns out to a grid 2 bar. Have I gone? So look, see if I can find that quickly. The guide, 15-minute guide. So if you haven't got the 15-minute guide, you really do. It's free. You should get it. It's will really help you trade. So finding a really good setup using Aikanashi, it just goes. Well, let's get it. Rather than jump really quickly, it just gives you an illustration of where the 15 is. Tells you about using 15 minutes. Tells you the sequencing and how to set your charts up. It then gives you blow by blow illustrations of what all these mean, and then breaks down the actual bars. Now you want to be seeing a bar here if you're going long. If it's negative trading and vice versa, these are red and it's trading under the 9 EMA. But that's a grid one. Doesn't get any better than that when you trade Aikanashi. Then we've got a grade 2 bar, which is still pretty good to take. And then we've got a grade 3 bar, which is wick to the top and to the bottom. And that is walk on by, wait for a 2 or a 1. Now, that is on my website and it's free. So just go and get it. So we've now got a grade 2 bar. Ideally, it's a grade 1, which is here. We take a look at the grade 1 and then you're off. And that's already been done this morning. And we're just waiting now. Ideally, of course, this was a perfect storm bar there. Oops. Get that on. That's a perfect storm bar. That is not. And the reason it's a perfect storm bar is because not only have we got a 15-minute flat bottom, we're overcooked on the stocks as well. And we're oversold at the moment. So the opportunity for this market to push through is not as great as this setup here. So this could just roll off. Yeah, so this could just roll off. Let the bots take care of that trade, I think. It's still a decent trade. It's still a decent trade, so it should be one that we probably should just set up for, but it might go overextended. You never know. So we'll put a wiggle and room in this at 3758 with a stop of what's the spread at the moment? It's 0.3. So varies between 0.5 and 0.3. Round that down to 9, and we'll add another 1, which is 10, which includes half a spread, which includes a full spread plus an extra spread on top of that to stop a double tap reversal. So 10 pips. That takes us within our target. Not sure this will actually trigger because we are overextended. However, you should never walk on by the opportunity for a trade, even if it is a new all-time record high required, because we've been getting those every day. So there we are. There's a 10-10. So the stop is under here. And we're targeting into this level up here. That's certainly within our box of interest. And what we're going to do, put an alarm bell down here in case the market comes back down. So we'll be interested in that. And then what we're going to do, we'll put an alarm bell up here because this is as you know, the lower 61.8% Fibonacci. So as the market gets up to here, if it does, if we do break and it does trade, then we want to be, as the market moves up to here, we want to be putting our stop to entry to make it completely risk-free. The bots do this function automatically anyway. Let's go and have a look at crude. It's the whole market's dithering today, isn't it? I'm just going to have a look at what happened on the PMI. Mixed. Manufacturing down. Expect that with Volkswagen and Porsche were down. Services slightly up. The composite within 0.1 of the target. So I think DAX is probably going to be coming down. Still nothing to see here. Let's go and have a look at that DAX. I've not put the pivot levels on the DAX yet. But it's got a bit of a rah-rah on that won't survive. Because money, you know, the powerhouse is manufacturing and manufacturing is down. It's gone up on services and the composite. Right, composite was 52.4. It was suggested to be flat and the composite has gone up, mainly because of the services sector, but Germany runs on manufacturing. So expect any rally to be sold into. Let's put I'll just put the pivots on just to see where we are. Let's get me pivot table. Right. So I'm just going to put the pivots on. 23, 589, 589.25. Low 23, 424, 424, 44, and the close is 23, 527, 23, 527.05. Whoops, 0.05. Yesterday's high 23,690, 23,690, 47, 23, 557.81. Right, so there's all the cash pivots put on. Let's take a view of where we are. So there's a closing gap there. Get rid of this. Get rid of this. We'll do the analysis live here. Get rid of that. Right. Right. So let's just zoom out. Get rid of that's a cash closing gap from August. So there's a hole in the market up there. Let's just hide the pivots one more and just look at the price action. We're on a 4-hour, clearly trading on negative territory. Market's starting to pull up on that composite PMI news. DAX is still registered Renko blocks black, red. We've got a hole further down in the market. The powerhouse or the DAX is manufacturing, and Porsche and Volkswagen, which are same company to a lesser degree, both interconnected, as everyone knows, and they're both on the slide, which will, I think, help resolve DAX to the downside. So on a 200 EMA, we are negative. On a 1 hour, we are right. We're quite on a balance here. So really, I'm just going to put my little ID here that I like to put in just to show me whether 200 EMAs. I'm just going to configure that so it shows the actual price. And yeah, there we are. Let's see what the pivots look like, cash pivots. Overlay that. So I've got a 2-day high up here and R2 here. You can see on an hourly basis, this is the kind of tops, a double top reversal there. So this is seems to be a limit from a technical point of view where the market has just stopped a number of occasions from the 11th right through to the 19th. We are overcooked here on the stochastic, and that's set at 15.55. Incidentally, while I'm talking, this is for the guys in YouTube, and if you are interested in understanding about the pivots, I can do a video on the pivots, and I can do a video on cash markets as well, and the 9 EMA strategy. If you be interested in watching that, let me know in the comments. If I don't see anything in the comments, and I probably won't do it. I'm only doing it for the benefit of the guys on YouTube, because the guys in my room already know. So a break under the 1 hour 200 EMA would be good. 15, let's get down to 15 minutes. And as you know, you can see Camarella breakout long. So we want to be trading under the Camarella breakout long. The reason we want to be doing that is because once the market has broken out of C-ball, Camarella breakout long, it's likely to continue in the direction it broke out of course, going up. Likewise, once it breaks down below the Camarella breakout long, it's likely to continue coming down. If we look at the area here, you can see the absolute classic consolidation phase here. You know, when markets run up, if they run to hi Kevin, okay, I'll probably do it then. If we've at least got one person interested to look at it, it's probably worth doing if it helps somebody. So bring up, we've got a rise here. And when markets run in a consolidative manner, the 9 times, I usually say 8, but it's probably higher than 8 times and above. 8 times out of 10. If you see this price action, the market, if the market runs up and runs sideways, it's very highly likely to break out to the top side. And if you don't believe me, go and have a look at the charts yourself. Any chart you want, any whatsoever, and just look for that pattern. You'll find it works very regularly. So the market did break out, but that's driven highly from here with the news. So a closing gap. So we've got a gap here. Where is the daily low? 2-day lows here. And the daily lows down here. So what I'm looking for is an extreme gap as well as a closing gap. An X gap, as we call it, is a low that, well, no, sorry, is a high on this case. So we've got the close here. We have a daily high here, which is known as an X gap. You can see the market came all the way down to the daily high here, and as long as it clocks it within 5 pips, it on the DAX, it's 3 pips on the FTSE, comes in the daily high, it is seen to be closed. So you can see the market makers pushed all the way down here before it sprungboarded up. So that's the X gap, extreme gap. So the extreme gap's been hit, but the closing gap has not. And that's the closing gap. Now, what we want to try and ascertain here is, where's my pivot table gone? Where's Excel gone? Hold on a second. I've got quite a lot of screens here. Right, I'm just going to have a quick look here. This is my pivot table. So what I want to see here is the DAX being a minimum of 37 pips away, ideally 74 pips away to close the gap. So it need at least 37 and 70. It's right between the idyllics. So what we could do is we could set a trade for the day when this settles down, because the market will more than likely come down. We have a closing gap here, so we either can do a breakdown here with a, let's call it 61 pips, with a 61 pip stop up here for the market to come hurtling down, and we have got the market on a 15% ATR impulsive move of 37. So with a 60 odd pip, that is pretty good. The other thing that we could do is we could put a trade under Camarilla breakout long for a target of 85 and a stop off the swing high here, spread +2. So you could put 61 here. So you could have a trade set for a better than 1-to-1 risk reward closing the gap, assuming the market's going to break down below C-ball. And I think I'm going to take that with a 61 and 85 target. 61 and 85. So we'll put our 85 target in here and a 61 here. And we're going to put our stop under Camarilla breakout long, and we're going to go in here. So we've got a 1 to 1.39% risk reward ratio, and in fact we can bring it down a little bit. That's it, 15. So 23,615. We can look at a break back under Camarilla breakout long. What we also need to do is to put a alert into the bottom of this consolidation, because that might attract people to buy. So when the market, if and when it breaks here, and if and when it comes down here, we can move a stop to entry. In any case, when the market gets to 30 pips, you want to be moving the stop to entry anywhere on this particular trade. So I'm going to save the DAX. Let's go and have a look at that FTSE. It's not flipping move, does it? But it went and took 2% off me this morning, so pin in the arse. It's just going sideways at the moment. We've got no momentum. We've got ATR lower than a snake's belly, no participants, negative at the moment. Let's put the 4 filter on and have a little look at where it looks like on a 4 filter. So there's the gap.
Alert triggered.
1 filter negative, 2 filters positive, 3 filters positive, 4 filters positive. It's in a bit of a flux. So there are 6 trades to be had going long at the moment. Gold is one of them that we're kind of looking at. You can see here, I did say that this could probably roll off because the market has got a weak candle. I'll show you that on gold again in a bit more detail. Turn the trades off. Put it down to 15 minutes. Take the fracker off a minute. So we were looking at a break here of that candle, which turns into a stage 2, not a stage 1, not a stage, a classification grade 1 bar. Now the difference, of course, as a reminder, is we were pulled back on the stop, so we're sprung loaded, ready to release to carry on with the direction of the trend, and there was a great 15-minute bar there. If you were trading the 415 strategy, then that would have been the bar there. We took a 15-minute fractal this morning, which has already won. The market has yet to spring back, maybe because especially if you're bot trading, you sat on a lot of profit today anyway. You might want to wait for the market to pull back at some point during the day down to the 30th percentile. Give you a heads up. Let the bots take the strain, do the trades. They've got the intelligence written into them to move the risk profile. They all just flashed up then, didn't they, for some reason? Why did they flash up then? Don't know. So the bots are in. That is still the 15-minute bar trade. I would really like to see it pull back, but as you can see from previous, the market can just carry on up, being completely overbought. So when you've got a market this strong, this bullish, freight trains moving, you never step in front of a freight train. You'll only spoil your day. Every time it's telling you it's going to go along, then you go along until the market tells you it's done. Now, at the moment, we have grade 2 here, which is a fractal as well. If I turn that on, I'll show you it's a fractal. There, that's a fractal. So it's a 15-minute fractal. It's a 15-minute bar. And we're trading above the 9 EMA, so all systems are go. Still, it's not ideal. It's still good, but it's not perfect. Let's go and have a look at crude. So we're kind of managing quite a few trades at once here. Pretty disappointed with the FTSE today. Will close the gap at some point today, and you just keep your eye on that for that to happen. Crude. Right, we're on a bit of a breakout here. It's quite interesting. So we can get rid of this now. And we can zoom out on the 1 hour and have a little look at how the phase waves are moving. Quite interesting, this. We have put in a lower high, but a higher low. So we've got this bit of a pendant formation. The higher it goes, the better we'll get for a risk-reward trade. So I'm just marking the points here, as you know, at least 3 wick points. Let's get the measurement correct. At least 3 wick points. Go back because the markets always repeat themselves. You can see this area's been quite a reasonable importance. And in the room, guys, I would keep an eye on this. I'm putting an alert all the way up here. If the market gets back to these levels, because this would be a really nice short on crude. What we can do is have a look at how crude's been behaving on a 1 hour and other indicators, so we can see here on the stotch. We could put an alert on the stotch as well. So catching the way it peaks up. Last time it peaked here, we'll see if we can catch it again if it peaks up here and see where we are. So if I'm going to move this stop as well under this bar and trap the price, you can see it's a good example here of the market is very negative, 1 hour and 4 hours, so it's obviously a short. And so the trend is negative. The price action is positive, and the price action is positive because we are trading above the 9 EMA, and you can see on this bar quite clearly on the 1 hour bar, we have a flat bottom candle. In other words, the market immediately accepted this as the low, and we've got quite a lot of pressure, buying pressure in there. ATR at the moment, average true range is around about 19 pips an hour. And we've got positive momentum in there. Let's jump down onto the 15 minutes. We had a lot of participation for a buy in here. So again, the on-balance volume said it was going to get going, and it has got going. But we're peaking out here. Let's have a little look. We can see my heads.
Alert triggered.
It is to the top side. That's at 1 hour. Let's go into 15 minutes. this could develop into something quite nice, actually. So put your alerts in, guys, in the room. For people who are watching on YouTube, do the same. And yeah. So it just looks like it's you, Kevin, that's interested in which one are you interested in? The cash pivots and how cash pivots are operated, or cash or cash markets. If you can, if people want to type in if it's cash markets or pivots they're interested in, then I'll put it on the to-do list. But it doesn't seem to be much enthusiasm from YouTube, or everyone's happy with cash markets and pivots and what they do. So as this goes up, we'll be interested to catch this, and it's just a waiting game, absolute waiting game. It's you know, you've got to have your strategy. Yeah, we've got to have a strategy. You've got to be diligent in the way you execute it, just like we did with the FTSE and the gap. Just because it worked, didn't work, doesn't mean it's not a good trade. It just means to say, and illustration, that things do not work 100% of the time. So you've got to have your strategy, you've got to be diligent in the way you do it, and you've got to be patient and waiting. And this is one of those times where we've just got to be patient. Will the market come down? Hell yes, it will. Is it going to come down at the moment? Doesn't look like it. We're waiting for it to top out. It'll either put in a new lower high, or it'll come up, potentially reverse into the overnight highs here in the Asia Pacific market. And then all we have to do, it seems so easy, but it is so easy if you've got the time, is you wait for the market to put in a 15-minute bar reversal. Make sure it closes under the 9 EMA. Go for a 1-to-1 or better if you want, but go for a 1-to-1. A break of the 15-minute bar, stop above there, get your 1-to-1, take your rupees and run. That obviously did a lot better than that yesterday. We come from crashing down all the way up here. So that was really, really nice. So let's take that off, because that isn't a trade that we actually did. I only generally leave those on if it's a trade that we did, so we can do a recap. Trap the price. Let's just keep trapping that price, and it's inevitable. We will get the trade. It's just a matter of when. So there we go. Cheers for the comments. Yeah, thanks, Kevin. So I'll have a look at the cash markets then. I'll do a video on the cash markets. Right, gold. That's crude. I'm going to go in a minute or two. Into 15 minutes. Market is just going sideways. So I'll leave that until we get an alert with the market coming down. That's not a problem. The bots will just carry on trading it anyway. FTSE. So last recap. No, that was the alert trigger. The FTSE looks like it's deciding it wants to come down eventually. That gap does need to be closed for certain. DAX on the 15-minute is put its first red candle in. It's still trading positive. The trend is down. Momentum, but price action is up. And until that breaks down under the 9 EMA and breaks under camera breakout long, there is no trade there. So we looked at crude. We're waiting for crude. FTSE, we're waiting for FTSE. We're waiting for the DAX. And we're waiting for gold. And already trade gold a few times. We want to trade gold again. But let's save it at this view at night. But mark the levels, because we're going to go soon. But you know, if you are just managing a cash pot and you're looking for targets in the room that we try and get 2% a week, aim for 2% a week, or train people to get 2% on their own. We got well over that, about 6% plus yesterday, and again 2.4 on the gold, 4% on gold, plus another 3 on the trade, 7% and lost 2% on the FTSE, so that's up 5%. So we're absolutely monstering it, really. We've got to be patient. Got to wait for gold to tell us what it's going to do. Got to be patient for the DAX. Crude's going to give it up at some point in the next couple of hours. And I want to keep an eye on that FTSE. It needs to close its gap. Any questions from the room? Okay, Kevin, so I'm going to go now. Any questions from the YouTube or the room? Going now. Myself. I've got a mentoring session straight after this, haven't I? Who are we running with today? Terry's tomorrow. It's Paul, the American. Yeah. So okay, I'm quite clear this morning. So we're going on. So yeah, thanks. Thanks for watching. If you haven't seen the tutorial that's up on YouTube, have a look. It may well change the whole way you look at charts and trading. It's a tutorial that I posted yesterday. Nothing from the room, guys? I don't suppose, is there nothing from the room?
All good, thank you.
Oh, God. Yeah, no worries, guys. And I will see you all. Well, I might come on to close the gap in the afternoon session. If I'm around, the market's looking okay, I'll put a note on the invite room that I might be trading the US Open, because we've made so much money out of the S&P 500. It'd be crazy not to make some more at the moment. So I'll let you know around about 2 o'clock if I'm going live, ready for the opening bell. Other than that, I'll see you all tomorrow. Bye-bye, guys.
Cheers, Dave.
Cheers.
Thanks, Steve.